Hello, Tiernorts, and welcome to this daily market commentary for the 28th of August 2019. Beautiful Wednesday here in the New York area. A day of grey and a day of rain. Hopefully a little brighter wherever you were. Quick reflection on Tuesday, where we saw the US yield curve become inverted once more, sending equities lower. As we know, a lot of market commentators have been questioning whether this traditional recession warning from the bond markets continues to hold relevance in the current economic climate. Despite the ongoing trade war with China, US economic data still remains fairly strong. Although the Fed have made it clear they will do whatever is necessary to maintain the current economic expansion. They have also stated there is no quote-unquote rule book for trade wars. So, will today's focus still be on the bond markets, or would attention turn elsewhere? Well, as been the case recently, we've had a lot of volatility, but what happens one day seems to get reversed the next. And Wednesday started off focused really being on sterling, all about Brexit. There was a number of headlines out earlier, which actually came to fruition later in the day, suggesting the UK government would ask the Queen to suspend Parliament until October the 14th, just days after having returned from their summer recess. This would effectively prevent any group of MPs from passing any new laws to prevent the UK from exiting the EU without a deal on October the 31st, which, as I keep reminding you, is the kind of the day, if you like. Deal or no deal, Boris Johnson is determined to fulfil the wish of the people to take the UK out of the EU. While the FTSE 100 was actually one of the major European bourses to show some early gains. Despite these headlines, sterling reacted pretty poorly, dropping from a high of 122.90 down to a low of 121.57 against the dollar, and also weakening against the euro, with euro sterling running from 0.9019 to a high of 0.9123. That aside, FX was fairly quiet during the European hours. And for the US session, FX ended up really being a function of equities. Stock markets rallied throughout the day, mainly on the back of higher energy prices. The Dow Jones closed up 1%, while the S&P and Nasdaq also made gains, although a little less than the Dow. Sterling, as we mentioned before, obviously had a big sell-off during the European session. Did manage a bit of a recovery, probably more of a intraday short squeeze than anything else, trading up to a high of 122.40. Before ending the day around 122.10. Euro dollar trade very, very quiet, just edging very slowly down to a low of around 110.72 on the day before closing at 110.80, while dollar yen was the main beneficiary of the rally in equities, closing at 106.10. So overall, a pretty good day for the dollar, despite US yields being at record lows. But the biggest move and shake on the day had nothing to do with bonds, equities, or FX, really. It was all crypto. And really all happened at the very end of the US day. Yes, being almost forgotten crypto, I would say, over the last couple of weeks, with the volatility we've had in other markets. But today, crypto did what crypto does best, blink, and you would miss it. But we saw Bitcoin drop from 10,200 down to a low of 9,560, and we saw Ethereum drop from 187 down to 166, a drop of $21, more than a 10% move from high to low, and probably took less than 30 minutes for that to happen. By comparison, euro dollar has not had a 10% range on the year. But Ethereum does it in 30 minutes. Now, with a move like that, you would expect an obvious catalyst. But aside from a large number of long Bitcoin liquidations on one particular exchange, I don't really have a lot else to go on. It's another classic case of the market getting comfortable with current levels, and then everyone heading for the exits at the same time. I've made a point of noting how resilient Bitcoin has been below the 10,000 level this month. Each time we've dipped below, we've bounced back very quickly, and it's fair to say it is really going to get put to the test today. Because that was a really sharp move on the back of nothing. And with that, I'm going to, with a move like we had at the end of the day, especially for Ethereum, it would be kind of rude for me to focus on anything else technically. You get a 10% move, you've got to kind of take a quick look at it. Since the late July high in Ethereum around 363, with the move we've had today, we have now lost over 50% of Ethereum's value in essentially a month. 50% in a month, which is a fairly hefty drop. If you imagine any other asset market moving like that, we'd all be having heart attacks. I identified the real beginning of this rally higher in Ethereum as beginning at the 141 level, which is kind of why I still have this chart up. It's a 2-hour chart with various levels drawn in, and this for me was where we had that spike, and then we sort of rallied up towards 180 initially. That for me was the beginning of that rally, and that was back in April. And between today's low, which was around the 166 area, and that level of 141, there are various points here that you could say will provide support. Probably the most notable actually is probably around 146.20, something like that. But various other bits and pieces along the way. But it's a pretty ugly looking chart. You make a high and then you get a real sharp move off that high. We have this support level here at 261, dive down through that, bounce around a little bit, make a high around here, 237, one little puck above it, can't break. And then we end up with this level of 197.86, which I've sort of described as a bit of a pivot level. For those of you being able to see the video, I've just expanded it out a little bit. We made a couple of lows around there, and then we really dove through pretty quickly. Bounced up towards it, didn't quite break. We had a couple of days where we did break above it and then back down again. And then we probably had 1, 2, 3 levels goes to try to get above it. And then ultimately today, the weight of long positions, I guess, was just too much. And we had that sharp move lower. Not for me to predict where we're going to go from here, and you never really know with crypto. We've seen chart moves being reversed before, but we've today broke through that low we saw earlier in August, 173.38, for which we did get a fairly sharp bounce. It remains to be seen whether that can happen again, but overall this chart looks pretty ugly, and for now the whole digital asset market is looking soft. So proceed with caution, my friends. Proceed with caution. And on that note, I shall bid you farewell for the day. I hope you all survived, and I look forward to speaking with you tomorrow. Cheers.